Hello friends, in our previous lecture we have started with our chapter number 2, that was dual effect of transactions and types of accounts. In that, yesterday we have introduced about the chapter of what is a business transaction. Business transaction is exchange of goods or services for cash or credit between two or more persons. That was a business transaction. Again, the types of business transaction we have seen, that are economic transaction and non-economic transaction. Economic transaction is such a transaction where the transaction can be measured in terms of money, and the exchange of cash is immediately or in the future. Immediately in cash transaction, in the future it is credit transaction, and which can be measured in terms of money, that is an economic transaction. Again, non-economic transaction is left, it is on second side. Then in economic transaction there are again two types and some more types: cash credit transaction and internal external transaction. Cash credit has cash transaction, credit transaction and other transaction, and internal external transaction have internal and external transaction, and non-economic is something different. So in this flow chart again I am saying business transaction, in that economic, non-economic, then cash credit and internal external, cash credit other, internal external. So yesterday we have seen what is economic transaction, what is cash transaction, where exchange of cash is immediately or the name is not given, that is for goods, service and assets, or receivables, payables also. Then credit transaction means where the exchange is done and the exchange of money will be in future, near future, but not immediately. That is a credit transaction, and always names are given in the transaction. And other transaction means these other transactions are not a credit transaction, not a cash transaction. Here immediately or in the future no cash will come or no cash will go. We don't have to pay any cash or we don't have to give any cash. These are other transactions where only a type of losses can occur. For example, goods destroyed in accident, goods destroyed by fire, goods gone by theft. Goods are going out from the business but we are getting nothing, so that are other transactions. Now today we are going to see this internal external, in that now we are saying internal transaction. I hope that everyone is getting my point. So on page number 26 friends, we have internal external transaction viewpoint. These transactions take place in two forms. Number one, internal transaction. In certain transactions there is no need of other parties. These transactions would take place within the business. As we have discussed internal liability in chapter 1, internal liability is within the business and between the owner and the business. Means we do not need any other person for it. So the same thing is written here also. These transactions are recorded in books of accounts. Example, sale of goods to customers, payments of wages to workers. If we are selling our goods to our own customers, or they are writing sale of goods to customers, payment of wages to workers. If we are paying wages, salary to our workers, then that are internal transaction only. Interest received from bank, amount paid for insurance premium, purchase of machinery, cash deposit. Oh, sorry. I am reading the external transaction. I am reading internal transaction again once more. In certain transactions there is no need of other parties. These transactions would take place within the business. These transactions are recorded in books of accounts. Example, depreciation on asset, loss due to natural calamity. These are all economic transactions but non-cash transactions. I made a mistake. I mistakenly read the examples of external transactions, but we are seeing internal transactions. Internal means within the business. No other parties are required. Okay, now they are giving example depreciation on assets. Now we have learned the word depreciation. What is depreciation? Depreciation is the value which is reduced on our assets. Every year the assets are reduced. In terminology this word is given. So if you are not knowing, you have to refer the terminology again. So depreciation is such a thing, the value every year the decrease on asset, that is our depreciation. So depreciation does not require any party. It is within the business itself. Loss due to natural calamity. If in the business due to any natural calamity, suppose rain, our goods are destroyed, then that is again an internal transaction. And these are non-cash transactions. Why non-cash? Because no cash is to be paid or no cash is to be received. Now external transactions. These transactions are between business and other parties. There are economic transaction, business These transactions are recorded in books of accounts. Example, now examples are correct, I have read by mistake. Sale of goods to customers, customers are outside. Payments of wages to workers, interest received from bank, amount paid for insurance premium, purchase of machinery, cash deposited in the bank. Now in short, what you need to understand is that internal transactions does not require any party, it is inside the business, within the business. And external transaction needs some persons, needs some parties, so that we can make transactions between us, between them and us. So external transactions are outside the business where other parties are involved. Internal transactions are within the business where no parties are involved. It is within the business. So that's all about internal transactions. So in the flow chart, again I am giving the flow chart. In the flow chart, economic transaction is covered because cash credit transaction, internal external. In that cash, credit, other, internal, external, everything is over. Now the last, non-economic transaction. What is this non-economic transaction? Okay. Page number 26 itself. In the books of accounts of business, only economic transactions are recorded. Non-economic transactions are not recorded in these books. There is no significance of non-economic transaction in accounting. Significance means there is no such meaning or no such use to write non-economic transaction. Now exact definition is given. Please underline that thing, that is with bold letters. Non-economic transactions are those transactions whose value cannot be measured in terms of money. Very simple. Non-economic transactions are such transactions whose value cannot be ascertained in terms of money. Example, very good example is given. Order received to supply goods after 1 month. A meeting held with consultants for expansion with business. We are just receiving the order. Suppose we are doing a business of some food items. Then we are receiving an order for 1000 food packets. But its value cannot be ascertained now, because when we are selling that, at that time only we will ascertain that what is the value. Before that we cannot ascertain the value, or we cannot decide the exact value, so it is non-economic transaction. Again, a meeting is held in the business for expansion of business or for anything. Only a meeting is held. We are not doing any cash credit transaction, so again it is a non-economic transaction. Here the flow of money is not there, and we cannot measure meeting in terms of money. So familiarity with economic transaction and non-economic transactions provides simplicity in writing books of accounts. Now friends, as I said, now we will have each illustration. Now we will see each and every illustration to understand the things. What are cash, credit, economic, non-economic, internal, external transaction. Each illustration we will see. You do not need to write. I will say what to write. Okay? Yes. On page number 26, illustration 1 is given. Describe whether the following transactions are economic or non-economic and clarify the reason for it. Very good thing is given. In order to, you all people need this thing, because in order to do the sums, first you need to know that it is an economic transaction, then only you can write its answer. Or if it is non-economic transaction, you do not need to write any answer. So friends, for that this is the base. Okay, illustration 1. Number 1. Assets purchased for 10,000. Now here on page number 27 itself we will see the along with the answers. Okay, asset purchased for 10,000. Economic or non-economic, then they are writing economic. What is the reason? Cash is paid against this. Now here in this transaction it is not clear that we are paying the cash, but as I said yesterday, what they are writing, asset purchased for rupees 10,000. No name is given. If you are going to a shop for purchasing an item worth 10 rupees also, if you are paying that 10 rupees immediately, then he will not write your name that XYZ person has purchased a thing of rupees 10 from me and paid the cash. No one is writing that name, because in day-to-day business so much people are coming and paying the cash, so we are not remembering anyone's name. But instead, if you are not paying that cash of 10 rupees immediately, you will pay in future, then he will write your name that Mr. X or Mr. A, B, C has purchased, and he will give 10 rupees in future. So in this transaction, if you are saying asset is purchased for rupees 10,000, so its value is 10,000 and amount is paid immediately as nothing is given, so it is a cash transaction. Number 2, asset purchased from Radha for 12,000 on credit. Now we are purchasing asset of 12,000, its value is 10,000. We are not paying the cash because the name Radha is given, or otherwise in the transaction itself they are on credit. But friends, in our sums of the chapters where we are doing the sums, always on credit, on cash will not be given. Simply if I am reading, see first and second transaction, listen carefully what I am telling. First question is very proper, asset purchase for 10,000. If no name is given, then you understand this is a cash transaction. First understand that it is economic or non-economic, then you decide is it cash or is it credit. Now assets purchased from Radha for 12,000 on credit. Again asset is purchased for 12,000, its value is in money, so it is economic transaction. But friends, name Radha is given on credit, you won't forget. Radha's name is given, so we have not paid the cash, it is economic, but it is a credit transaction. Relation of debtor, creditor. Why? Because Radha is our creditor, we have purchased from her, we will pay the money in future, so they are our creditors, and for Radha we are debtors. Assets sold for 20,000. Again the value is terms in the money, 20,000 is economic transaction, again cash is received, no name is written. Assets sold to Meera for 22,000 on credit. Again it is economic transaction because its value is in money, and again a name Meera is given, so credit transaction, and we will pay that money in future, so it is a credit transaction. Again relation of debtor and credit. 8,000 paid for wages. Again wages are paid, it can be measured in terms of money, so it is an economic transaction, and 8,000 wages are paid, so cash is paid. Simply now you understand this thing, what are economic and non-economic. In economic transactions, the value measured in the terms of money, and in non-economic we cannot measure in terms of money. Or if sometimes order is received, then okay, its value will be given, but still order is received, no transaction is done, so it will be non-economic. Transaction should be there should be some exchange of goods or services, maybe in cash, maybe in credit, so it will become an economic transaction. Again 9,000 received for rent. Again we have done a transaction of rent, we are receiving the money, so it is economic transaction and cash is received. Liability of 15,000 is settled. Liability means what we have to pay in future. We have paid now rupees 15,000, so it is economic transaction and cash is paid for it. Liability is paid in cash. Receivable of 18,000 is received. Again it is an economic transaction because a receivable is received and cash is received for it. An order is received to supply goods of rupees 10,000. Now again I will repeat friends, don't just see that money is given 10,000, rupees is given 10,000, so it is economic. Always rupees is given, so it is not economic. But in transaction number 1 to 8, there is some we can say that there is some exchange. In transaction number 1 and 2 there is exchange of asset. In 3 and 4 there is also exchange of asset. 1 and 2 we are purchasing the asset, 3 and 4 we are selling the asset. So there is some exchange. Again for 5 we are receiving the money, so that is an exchange. For 5 we are giving the money, for 6 we are receiving the money, for 7 again we are paying the money, and 8 we are receiving the money. So there is some exchange of goods or services in cash or credit, so that are economic transactions. But now think about number 9. An order is received to supply goods of rupees 10,000. Only order is received, okay, 10,000 it is in terms of money, but have you exchanged anything? Have you exchanged your goods? Have you received any money? Have you paid any money? Have you taken every goods? No exchange of goods and services are there. They are just giving an order, so it is not economic. It is neither cash or cash transaction nor establishes relation of debtor and creditor, if we are seeing the reason of the book. A planning is made to buy one asset. We have purchased an asset? No. Only we are doing its planning. So again it is a non-economic transaction because no cash is flowing out, no relation of debtor and creditor, that is given in the book. Otherwise you can understand in this way. Just we are planning. No asset is coming, no asset is going, no cash is paid, no cash is received. Okay, in some different way we can understand. If excluding this transaction, I will give one example of myself. A planning is made to purchase an asset and rupees 10,000 is paid in advance for it. Now this will become an economic transaction. Why? Because we have planned for our asset, that is non-economic. but we have paid rupees 10,000 in advance, so there is exchange of money. There is exchange of money, so it will become economic, but this transaction will become non-economic. Reason is simple, my friends. What we have to think about is that only planning is made, nothing is coming, nothing is going in the business, so it is non-economic. But planning is made and 10,000 is paid in advance, so cash is going out again, that is an economic transaction. To enhance the sales, enhance means increase the sales. For discussion, a meeting is arranged with the salesman. Only a meeting is arranged, discussion is made, but no thing is going out, no thing is coming in, no cash is coming in, no debtor creditor. Again, it is a non-economic transaction. Okay, note. To recognize economic transaction from the following two questions, when the answer of one question is yes, the respective transaction will be treated as economic transaction, otherwise it will be non-economic. See what I was saying, anything is coming in, anything is going out, means cash is coming in, cash is going out. That can be an economic transaction, or if debtor creditor comes in relation, that is also economic transaction. Now they are also giving the same thing. Is there of exchange of cash, whether cash is coming in or cash is going out? If the answer is no, then decide for number 2. Does the relation of debtor and creditor come into existence? Or if it is yes, then it is economic transaction. If it is no, then it is non-economic. So you have to think about only two aspects: whether cash is exchanged or cash is coming in or going out, whether a relation of debtor and creditor, means whether we are purchasing it on credit or not. If one answer is yes, then it will become an economic transaction. After having recognition of economic and non-economic transaction, the knowledge of cash and credit transaction is also important. Now, in page number 27, they are telling how will you identify whether the transaction is cash or whether the transaction is credit. I already said in my previous lecture also, today in the starting itself also I said, if no name is given in the transaction, then it is cash. If again in the question name is given, then it is credit transaction. But one more thing we have to remember, if no name is given, then it is cash. If name is given and in the question itself they are telling it is exchanged in cash, then it is cash transaction. Because sometimes to confuse you, they will give such a transaction. For example, asset of 20,000 is purchased from Radha on cash. So they are clearing the word cash, so it is cash transaction. And credit transaction, how will you identify when names are given or personally on credit is given? Now what is given in the book we will read. Cash transaction. In this kind of transaction, there is exchange through cash or bank. Some cash or bank exchange would be done. In such transaction, the word cash is mentioned. If the word cash is not mentioned and the name of person is also not mentioned, it is treated as cash transaction. If no name, no cash, nothing is mentioned in the transaction, it is a cash transaction. In this transaction, bank or cash account is definitely affected, and consequently bank or cash increases or decreases. How will you identify the cash or credit transaction? What they are telling, the three things. Exchange should be done through cash or bank. Yesterday we have seen bank is also type of cash. Then number 2, in such a transaction, word cash will be mentioned sometimes, or sometimes no cash word will be mentioned and no name is mentioned. That is also a cash transaction. And in number 3, they are telling it will affect our business cash or bank balance. Sometimes when cash is coming in, bank balance, cash balance increase, and if we are paying, our cash balance and bank balance will decrease. So this is a cash transaction. Now credit transaction. In this kind of transaction, no exchange is through cash or bank, means there is not exchange of cash or bank in the transaction. We are paying in future, not immediately. There is emergence of relation of debtor and creditor. Emergence means there is in existence. Debtor and creditor in existence. One will receive, one will pay. Name of person is mentioned. As I was saying before, my friends, name will be personally mentioned. The word cash or bank is not mentioned. It definitely affects the account of person. Whereas in cash transaction, it affects the cash or bank of the business. Whereas in credit transaction, it affects the name of the person. Means the name to whom we have to receive or to whom we have to pay. Now in short, what will you remember? How will you identify cash or credit transaction? When nothing is given, it is cash transaction. When personally the word on cash is given, is cash transaction. Otherwise it will be a credit transaction. Means if the name is given or in the question it is clearly mentioned on credit, it is a credit transaction. In short, you can understand this. Now we are going to see illustration 2. Describe whether the following transactions are cash or credit transaction and explain the reasons for it. Okay. Directly we are seeing the answer. Goods are sold for cash rupees 500. See, in the question itself they are giving on cash, so it is cash transaction. What is the reason? If the reason you are not seeing, then it is okay, because what they are telling, cash increases. You just have to remember, my friends, goods are sold for cash. The word clearly cash is given, so it is cash transaction. After that we need to decide cash is coming in or going out. That we will decide afterwards. But first you identify whether it is a cash or it is a credit transaction. Goods purchased for 800. Now see, understand the difference between question number 1 and 2. In question number 1, sold for cash, so it is cash transaction. In question number 2, word cash is not given, no name is given, nothing is given, so it is cash transaction. Number 3, goods of 900 sold to Meena. Now see, goods are sold. No cash word is given. Instead, the name is given. So it means that we have not paid the cash to Meena. We will pay in future. Or sorry, Meena has not paid us the cash. We don't have to pay. Meena will pay. Why? We are selling the goods to Meena. So she must pay the cash to us, but she is not paying the cash. So it is credit transaction. Or what book is saying? No cash word or sorry. No cash word and also sold to Meena. These reasons you ignore. You will understand. We understand by ourselves. Okay. Goods of 900 sold to Meena. In that no cash word is given and instead name is given, so it is credit transaction. Simple. Goods of 2000 sold to Nutan for cash. Now friends, understand. Name Nutan is given. That is okay. Till there it is credit transaction, but after that they are writing for cash. So it is cash. So understand the difference between 3 and 4. In number 3, the name Meena is given. In number 4, name Nutan is given. They both will be credit transaction, but in fourth one, for cash word is given. So it is cash transaction. Salary paid 5,000. Again, salary is paid, already paid. We are not paying. It is already paid. So it is cash transaction and no name is also given. Insurance premium paid. Paid received will be always cash only because it is in past tense. Pay is present, paid means past. We have already paid, so it is cash transaction. Or no names are given. Goods of 200 received as free sample. Now see, goods are received of 200 as free sample. Now this transaction is little bit confusing. Whether any cash is coming in or whether cash is going out. No cash is coming in, no cash is going out. Then these goods are of free samples. These goods are of free samples. So a relation of debtor and creditor would not come into existence. You have to think in such way because previously it is given whether cash is exchanged or whether a debtor-creditor relation comes into existence, then only that transaction can be economic. This transaction is non-economic. Reason is simple. No cash is coming in, no cash is going out. You are correct that goods are coming in. Most of you may be confused that goods are coming in. But we don't have to pay any cash in future because they are free samples. They are for our simple use. They are our free samples. So this transaction is neither cash nor credit. It is non-economic transaction. Okay. Furniture of 5,000 purchased from Sriji Furniture. Furniture is purchased, but Sriji Furniture's name is given, so it is credit transaction. Reason, cash word is not clear and the name of party from whom we are purchasing, that name is given, so credit transaction. 3,000 paid to Sai Agency for advertisement. Now name is given, but see, we have paid. 3,000 is paid to Sai Agency. Here word cash is not given, but the thing, indirectly cash is given. See how? 3,000 paid to Sai Agency. Paid means we have already paid, so it is cash transaction. Whether name is given or not given, the word paid received also shows that Commission received. Okay, name is given or not given, the word received is given, so indirectly it is saying that cash is received. So it is cash transaction. Goods of 5,000 purchased for cash, payment is made through check. Now they are dealing by themselves only. Goods are purchased for cash, so it is cash transaction. Okay, but we are paying the money through what? Through check, that is okay. Goods of 6,000 sold, payment is made through check. We are selling the goods, payment is made. Payment is made, so credit transaction, we have given the payment, so it is a credit card, cash transaction. Rent received by check. Again the word received is given, so cash is coming in. Already cash have came in, received, not receiving. Received or paid word will be given, so indirectly it is a cash transaction only. Telephone bill of 700 paid by check. We are not paying now, but we have already paid, so it is a cash transaction. A check of 3,000 issued to Lakshmi Ben for her dues. Issued, paid also are other synonyms. See, here so much synonyms are given. We have given our check to Lakshmi Ben, so our bank balance will decrease. So we have issued. The word issued, paid, received, given are also cash transaction only. They are denoting indirectly the cash only. Why? Because paid means already paid. Received means already the cash have come. Issued means already the check is given. Check is given, so our bank balance will decrease. Cash will decrease, bank will decrease. So it is a cash transaction. In brief, transaction through which cash or bank increases or decreases are called cash transaction. So friends, that's all for today. We have seen illustration 1. In that we have to identify economic, non-economic transaction. Illustration 2, we have to identify cash or credit transaction. If you are not understanding the things, then please watch it minimum 2 times. Then you will get the things slowly, because this is just a starting. You will get the things slowly. And there are sums also which will clear our all doubts. Okay friends, so that's all for today. Thank you so much.